Hi guys, welcome to the channel. If you're new here, be sure to subscribe to support the channel and see more videos like this one where we analyze the market minimalist. So by keeping it simple, by using simple indicators, by using a very clear and simple analysis of the market and of the price action. Today we are looking at the British pound Japanese yen on the 4-hour time frame, and as you can see, I'm just using two indicators. The first one is the advanced signal bars, which I'm going to discuss soon, and the second one is just a regular moving average. What I did was to set the moving average to be of length 54, which is a pretty smooth moving average. The advanced signal bars instead is one of the indicators that we created and that is available in our suite. So if you are interested, you can test it for free yourself by visiting the link in the description down below. So the setup is very simple. When you have the price above the moving average and the candle breaks above this horizontal line, this red horizontal line, then you can place an order. Usually you can see that we have a very tiny breakup here. Usually I like a bigger breakup. It should be clear that we have a breakup. You might wait maybe the next candle, the candle after the breakup. In this case it was a downward candle, so it was a bearish candle that closed, well, actually closed above, but it was really tiny, so I would not place an order for this kind of breakup, but I will wait for something more like this. And once you have this breakup, you just place an order. I like to place an order, even though I don't trade this kind of setups too much, but when I do, I place an order which is like this. So I set the stop loss to be below the lowest point, the lowest and most recent low point, and then I set my target to be so that the risk reward is 1. Okay, so I always trade these setups with a 1 risk reward ratio. Of course, there are multiple ways you can trade this kind of setup. It all comes down to your understanding of the market, your understanding of the assets that you are trading, your understanding of the time frame that you are trading on, so that you can maximize your profit. This is one way to do it. Of course, you can test the indicators and define your own rules. I have many traders who really like this kind of setup with the advanced signal bars, but they have multiple totally different setups. So that's because they have different risk attitudes, they have different strategies, so the setups are absolutely different. Mine is like this, so it's a 1 risk reward ratio, and then I just enter the trade. What happens here is that when you are working on a typically trending asset, so an asset that moves quite dramatically up and down, so you have trends, you don't have an asset that is pretty flat and moves sideways, then you can maximize your profits because you have this setup and you are likely going to see the price reaching your target. And as you reach the target, you probably are going to have another setup, and then another one, and then another one above the previous one, and then another one. And you end up taking a lot of profits, a lot of profitable trades, one after the other. Of course, it's going to be a 1x return, but you will end up maximizing your profits by summing all those together. And then maybe, but not necessarily, you will just lose the last trade because it's the trade that the price reverses. There are times when you will not lose the trade. There are times when you will lose the trade. Okay, so the first trade is over and we just got engaged into another trade. So as you can see here, we got a small level, a red level here, and a small break up of this level. But as I explained before, I don't trade this kind of breakups. But we then got another breakup, another level, another breakup, and so I place another order for with a risk reward of 1. So I'm now waiting to see what happens now. But as I explained before, when you are operating in a trending asset and on a trending time frame, then you are probably going to get a few profitable trades with a 1-to-1 risk reward, and then you might end up losing the last one. This is the typical scenario. Of course, the assumption, as I just said, is that you have to trade on a trending asset, which is not obvious. Okay, the second trend is over as well. We reached the target. It was a bit slower than the previous one, meaning that we had some movement here within our stop loss area, but it eventually went to target. I would like to take the chance to answer to a question that I received recently, which is what should I do if the price falls back down below this red horizontal line, which is displayed by the advancing bars? Well, just leave the trade open. It's not significant. What we are looking for is a break above this red line. Of course, if you are on the short side, you want the setup to be like this. So you want a breakdown of the green horizontal candle. So you want a breakdown, and you, like in this case, and you want, of course, to be below the moving average. So if you are below the moving average, if you have a breakdown of a green horizontal candle, then you can place your order, and it works just like this. The second order is over, and let's see if we get some more in the coming days. So a quick update: we just got another opportunity which I'm trading. The risk reward, as you can see, is always 1. So I'm about to enter into this trade as soon as the price moves to the entry level, and it's going to be the third one. If we are at a reversal point, then it's going to be a losing trade, and we end up having one winning trade. If instead we get another win, then we might have a better performance. Let's see what happens in the coming days. So what we got here is very interesting because, well, first of all, we reached another target, so we have closed another winning trade with a 1-to-1 risk reward. But what happened is that the price went kind of halfway into the stop loss, which to some traders is a little bit intimidating because they get emotional and they might end up closing the trade, which you should never do. When you have a stop loss, you should stick to it because it's your rule of engagement. If you set the stop loss, it means that you are willing to lose that kind of amount, that kind of money. So you should never close the trade before or because something else happens, unless you have any technical evidence that the analysis, the initial analysis, is wrong. So if you do, then it is more than justified to close the trade. Otherwise you should not. And in fact we can see that the price then moved higher, but the interesting thing is that we actually got another opportunity here. So we had a breakup of the red horizontal line. So what I typically do in this case, if I have one open, I don't open a second one. Because I want the first one to close before, and then I look for a second opportunity. And this is something I like to do. You can decide whether you can scale. Maybe you can scale in your trade, or maybe you can move your target up. It depends on you. I don't do this, but of course trading is very personal, so you should have your own rules and you should stick to them. So back to the setup. We are now at the third closed trade. They were all three winning, and let's see if we can get some more winning trades. Fast forward 10 days and I'm done with the fourth trade. So I just closed the fourth winning trade, 1, 2, 3 and 4, all with the same rule. When the price breaks up this horizontal red line, this horizontal red line, this horizontal red line, and this horizontal red line, then I place an order with a 1-to-1 risk reward. And what I got was 1, 2, 3 and 4 winning trades. Let's now see if we got another one. I see that the moving average is kind of slowing its growth rate, so I might it looks like it may be slowed down and then eventually turn around. In such case we will probably get a losing trade, or maybe we won't get any more trades, or maybe it will continue to rise and we will get more trades. So let's keep an eye on this, and I'll keep you updated should more trades are available to us. The uptrend is over. The uptrend is over and the price is now trending down. We can confidently say that we closed 4 winning trades, but now the price is moving to the downside. Actually, it is offering interesting opportunities. They are all valid selling opportunities. I didn't take this because I'm involved in 3 more trades right now, so I want to keep my risk under control, and I don't want to overexpose my trading account. So I'm happy that we had 4 trades, all winning trades, one after the other, all the way to the top. But I'd like to comment on what happened in the last trade. Well, as I mentioned before, the last trade is probably the one, at least it's the one with the highest probability of being a losing trade, because the price is where the price reverses. And the same happened here. I'd say that we were pretty lucky here, because we got a candle which broke our target, went past our target and then retraced. If we didn't have this breakout here, then we would end up with a losing trade, because right now if I draw a horizontal line here, as you can see, the price just touched our stop loss that we had before. So we were pretty lucky here. Sometimes you are not this lucky. Sometimes it is possible to get also the last trade to be a winning trade, like in this case. Sometimes you just don't get the last opportunity because it never comes, so you are safe and you got maybe 1, 2, 3, 4 X opportunities, and then you're waiting for the next one, it doesn't come and the price starts to revert. That is also a case when you don't lose the last trade. In this case we were just lucky, so I'm happy with all the trades that we had, the return that I had. So I hope you liked it as well, and if you do, make sure to like the video below. If you have any question, feel free to ask in the comments, and make sure to subscribe if you didn't already. I'll see you guys in the next video.